Welcome to MrWebProfessor.com. This course is Personal Finance 101, Lesson 3, Income and Deductions. If you're viewing us on Google Video or YouTube, consider visiting our website www.MrWebProfessor.com, where you can find this entire course as well as many other helpful courses. The agenda for this particular class is to consider our income and our deductions. Some of the things we'll look at under income is determining our sources of income and the advantages of building multiple sources. Under deductions, we'll determine what deductions are currently being deducted from your pay and understanding some common deductions such as taxes and health care. So what do you need for this lesson? Well, you should find your pay stubs from all of your jobs for both you and your spouse. If you have a business, you should consider looking at your profit and loss statements from your business, as well as getting any dividend statements, bank statements, and investment statements you may have. Let's consider the definition of income. Income is defined as an individual's total earnings from wages, passive enterprises, such as a business, and investment interests and dividends. Some common sources of personal income are earnings such as salaries and wages paid by employers in return for work performed. Business income from passive business entities such as a DBA, LLC, so on, S Corp. Pretty much every business entity other than a C Corp. Dividends from bank accounts and investments. These are all common sources of personal income. Let's consider the difference between gross income and net income. Gross income is your income before taxes and other deductions are taken out. Net income is your income after all deductions have been taken out. Usually this is the amount that is deposited by your employer into your bank account, or the amount that your check is written for. So, let's take an example of this. Your gross income would be your pay times the number of hours you work. So if you worked 40 hours times $10 an hour, your gross pay would be $400. Deductions are taken out before you receive your pay. For instance, the $400 minus any federal or state taxes, as well as other common deductions. So in this example, if there was $75 of deductions, the remainder would be your net pay of $325. You should consider developing multiple sources of income. The advantages of doing so are that the more sources of income, the less impact the loss of a single income stream will have. Also, the ability to designate an income stream to a specific purpose, like retirement or savings. So if you have multiple streams of income, you can divert one of those streams strictly to retirement or savings while you live off another stream of income. The disadvantages are that it can be difficult to get started having multiple streams of income, and it can also be difficult to manage. It can take a lot of time if you're running 2 or 3 businesses, each creating a different stream of income for you. Let's now move and consider deductions. The definition of payroll deductions is the amount withheld by an employer from employee earnings. It typically includes income tax, national insurance, or Social Security contributions, and may also include group insurance or pension fund contributions, union or association dues, authorized wage assignments, and other items that may not be listed here. Deductions are always listed on your pay stubs. Some common payroll deductions are FICA, Federal Insurance Contribution Act, which is a tax on employees and employers that is used to fund the Social Security system. You also have, in addition to FICA, your federal withholding tax and your state withholding tax. You may also be having things such as insurance deducted, medical, vision, dental, life, etc. And you may have a flexible spending account established with your employer that may be being deducted from your gross pay. It's just important that you look at your pay stub and consider all the deductions, and if you have any questions, consult your human resources professional so that he or she can provide you with the details surrounding that deduction. Why are deductions important? Understanding your deductions are important because you may be paying something that you don't need. And if you're paying for something you don't need, then you could cancel that and save that money. You may be able to save by electing for some pre-tax deductions, such as your flexible spending account, which, if your employer has this, allows you to set aside some monies pre-tax, therefore reducing your tax liability, for qualified expenses, which in this case are medical-based expenses that are not covered by your regular insurance. You might consider setting up a reduction that goes directly into an investment or savings account prior to receiving your net pay as a part of savings or a retirement plan. This way, it automatically goes there and you don't have to do it after you get your check. And you can begin saving for your emergency account or your retirement, whatever you may like to save for. And that can be very, very helpful. If you have any questions about any deductions, you can always consult your human resources professional at your job, or you may be able to speak with your accountant. So let's review. We talked about your income, determining what your sources of income are, and the advantages of having multiple sources of income. We also talked about deductions and how it's important to know what those deductions are, and we talked about some of the common deductions you might be having taken out of your paycheck on a regular basis. Also, I mentioned, if you have any questions, consult your HR department, your HR professional. He or she should be able to answer every question you have regarding your income and your deductions. Thank you for taking this lesson. I hope you enjoyed Lesson 3 of Personal Finance 101. If you're watching this on YouTube, please visit us at www.mrwebprofessor.com.